Hey everyone, and welcome back to another portfolio update, probably the worst portfolio update to date. So the last week, the portfolio went down 12.16%. Now, of course, that sounds horrible because it is horrible. But if you look at the S&P 500, that was down 9% in just a week. Now, year to date, it's not looking that much better, to be honest. Year to date, the portfolio is down 20.63%, whereas the S&P 500 is down 13.79%. Since the start of this portfolio, I'm still up somehow. I'm still up 26.71%, whereas the S&P 500 is only up 1.72%. So let's discuss what I've been doing with the portfolio in the last couple of days, and let's discuss the game plan. I also want to touch back on some macro-related data that we've touched on in the last couple of videos, in case you missed that. Now, before I continue, of course, I want to reiterate that I take no pleasure in watching the stock market implode and having to talk about videos where there is a lot of red or some fire in the thumbnails and stuff like that. No, I would love it if the market keeps going up and up and up, just like we've had for the last 2 years or so, up until actually mid-February. I would love it if the stock market continues to go up, but that's not how it works. Fortunately for us, there are more bullish years or bull markets than there are bear markets. But to have great returns in bull markets, you have to have the stomach to survive a correction, a bear market, and not be afraid to buy when others are fearful, right? We've talked about that phrase, be fearful when others are greedy, and be greedy when others are fearful. Unfortunately, when it's time to be greedy when others are fearful, not that many actually want to be greedy, because the next phrase is one that I've seen being used quite a lot is, I think it will go lower, it will go lower. I've seen it in the technical analysis, the support levels are lower, so I will only buy when it reached that point. Okay, fine. Then, of course, some people do not have a cash position. Some people run out of cash already right now, which makes sense, right? We've had plenty of opportunities in the last couple of weeks, not just in the last couple of days. So you might run out of cash. Maybe the next date where you can inject cash in your portfolio is 1 week from now, 2 weeks, 3 weeks, maybe only next month. Okay, I understand that as well. It's important to have a game plan. So I want to talk a little bit about that in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. A special thanks to Finch, more on them in just a bit. Now, for those that did miss the last couple of videos talking about macro-related stuff, this is basically it. If we look at the S&P 500, this is the index that basically tracks bearish sentiment to bullish sentiment. So right now, bearish sentiment is probably closer to 62%, maybe even above it after that Friday. And the last time we were so high or higher was during the 2009 market bottom. Now, I'm not saying this is an indication that we are near the bottom or at the bottom. We don't know. But if we look at what has happened when that sentiment was above 61% bearish sentiment, we can see that 1 week later, 2 weeks, a month, 2 months, 3 months, 6 months, a year later, if we go back to 2009 and 1990, we can see that the stock market or the S&P 500 went up during each and every period. Then looking at another case here, if we look at the S&P 500 when it hit a 1-year high in February, and then it closed down more than 5%, which was in March, and now we're down even more. This is what has happened. So we now have more dates, of course, 1975, 78, 79. So clearly, 4 years, 5 years where things didn't really look that great. But again, these are short-term things because all in all, you can see here, the average market went up 1% 1 week later, 1.23% 2 weeks later. But the percent or the amount of times that we actually went up and not down was 67%, 73% when we were looking a month later, 67%, so we're back down 2 months later, then 87% of the time 3 months later we were green, and then if you look at 6 months, 9 months, and a year later, 100% of the time the S&P 500 went up. Now, of course, like I said in the last videos, we can, of course, be in the 33% or 27%, where next week we are still going to go down. That is definitely a possibility. Then something that I keep mentioning even before the tariff thing came about, if we look at the recessions or the black event that happened in the history, right? If you look here at the stock market in the United States, Yes, you've had years where the stock market went down, but all in all, what do you clearly see here is that if you invest for the long run, you are probably going to win, right? It goes up and to the right. Of course, if you are close to retirement, then hopefully you have a very, very healthy cash position already built up. But if you are young, if you're in your 30s or in your 20s or even 40s, you have time on your side. Up next, and that's the volatility index or the VIX. On Friday, this one was above 44. Now, if we look at the last time that was above 44, well, that was here back in the 2020 crash, the pandemic one. Now, of course, since then, we've had multiple times where the VIX went actually above 30. But above 40 is something quite special. I mean, if we go back all the way to 2006, 2005 or so, there aren't that many times where it was above 40. Now, when it does go above 40, those are quite special moments. I mean, back here, 2018 was one, 2020, of course, and then when we go back here, 2008, I mean, that was closer to 90. We know exactly what has happened. But here as well, we have some data we can look at. Again, apologies for repeating the same thing, but not everybody watches the same video. Here, S&P 500, after the VIX reaches 45, first case in a month. We can see here that, again, the odds are in our favor. So 1 day later, 2 days later, 3 days, 4, 1 week, 2 weeks. So here we don't have 3 months, 6 months, 9 months, or a year, but we have maybe short-term price action for the S&P 500. We can see here that the lowest percent, we can see here that the probabilities are on our side, right? 75% of the time, 1 day later, the markets went green. 3 days later, 83%, 4 days, 75%, a week, 83%, 2 weeks, 75%. Now, of course, that's great. The odds are in our favor. If those were the odds at a casino, you would probably be at a casino every day of the week. But there's always a chance that we are on the other side of the coin. It's always something to keep in mind. But the odds are in our favor. If we look at the S&P 500, after 2 consecutive days of 4.5% declines, here we're getting 2 months, 3 months, 6 months, and a year later. And here as well, the odds are in our favor because the lowest that we're seeing here, the lowest percent that we're seeing here, and that's 2 weeks later, 60% of the time we were green. 1 day later, 80%. A month later, 90%. 2 months, also 90%. 3 months, 70% of the time. 6 months later, 90%. And then a year later, 80%. Are you not going to take advantage of those odds? Now, of course, like I said, we can go lower. But I like my odds here. I like my odds. Now, of course, since we are dealing here with tariffs for multiple countries, probably every single day we're maybe going to hear some announcements from, well, individual countries such as we've seen in the last couple of days. Vietnam, Cambodia, Argentina, those types of countries start to negotiate, start to talk with the US. I probably expect to hear about the same up until April 9th, and maybe, who knows, maybe on April 7th or April 8th, we're going to hear, actually, we've had so many talks with multiple countries, we don't have enough time to deal with all of them, so we're going to extend it, right? It's not going to be April 9th, it's going to be April 15 or something like that. Could be. Just me speculating here, I don't know what's going to happen. Nobody knows. Whoever thinks that or whoever speaks in certainties is probably lying through his teeth. And by the way, when you hear analysts on CNBC or economists on CNBC, you can of course ask yourself the question, if they were so good, why aren't they filthy rich? Why aren't they one of these most successful investors out there? Because guess what? Successful investors probably don't waste time to appear on CNBC, right? Or maybe they do. Who knows? But me personally, right now, I'm yet to meet a rich, wealthy analyst or economist. Because let's be honest, economist, the weatherman, who has the higher win rate here? Probably the weatherman, right? Again, no disrespect to economists, but most of the times when I watched an economist or an analyst talk on TV, talk about the economy, talk about bull market, bear market, especially bear markets. I mean, yes, a broken clock is right twice a day, but we have 24 hours in a day, so the odds are definitely not in their favor if they are that broken clock. All right, now moving back to the portfolio, the couple of changes that I've made. Of course, some of the positions you already know because I did another video talking about that, but all in all, not much has changed. AMD is now number 9 because I am finally above 100 shares on that position. I'm very happy with that. Meta is now number 10. I also, well, you'll see I added to Meta. So I added 4 shares to Meta, a 26.6% increase. I added more shares to Uber, a 9% increase on that position, a 20% increase of Nebius, so added 50 shares there. Nebius, all in all, is still a small position for me, but of course, I'm already down 14% there. But this is going to be, in my eyes, a big winner. Just we need time. I need time to see how this plays out, but I am happy with the way things are looking because, well, I can build up my position. Now, on the cash position, we're going to talk about that in a bit. Now, Uber specifically, I mean, Uber right now is still up somehow year to date. It is up 1.5% year to date, has a market cap of $135 billion. PE trailing 12 months, 14.2 times. PE next 12 months, 26.6 times. This is a rare case where the trailing is actually, well, lower than the forward one. But if you look at the growth rate for revenue, forward 2 years, 14.5%. If you look at EPS, same period, that's actually expected to come down. Right now, free cash flow margin sits at 15.7%. All of this, of course, can be found on Finch stock research platform. They have been sponsoring some of my videos, as you know. Now, what's special about them is if we go here to financials, these are, well, segments and KPIs, which you can only find here on Finch. You can do that for Uber. We've done that in the past for Alibaba, for Meta, for Alphabet, for, well, all of the companies that you probably own in your portfolio. You can find some segments and key performance indicators here. So with Uber specifically, if you want to see where or how they generate their revenue, you can click on mobility, you can click on delivery and freight revenue. You can then stack them up to make it look even better visually, which of course we always like to see. And then you can basically adjust the time frame here. So let's do 2020 with the impact of the pandemic. We can see the following. Mobility revenue has grown at a compound annual growth rate of 42.4%, delivery close to 37%, and freight revenue 50.13%. Of course, this is now a fast growing company and has been for quite a while. If you actually want to look at free cash flow, you can also look at that. You go to cash flows, free cash flow, and here as well, you can see the magic of, well, becoming a very, very profitable business and one that is actually growing or expected to grow quite fast. You can see here the expected growth rates for the future for free cash flow with Uber, 17.7% year-over-year growth for free cash flow in fiscal 2025, followed by 24.7% year-over-year growth in fiscal 26, then another 19.1% year-over-year growth in fiscal 2027. Truly one of the most underrated and maybe even undervalued companies right now, and that's Uber. Now, of course, as you know, I know very well that the risk of the future for Uber is that, well, if Waymo and Tesla take 90+% of the market when it comes to autonomous vehicles, that's going to be an issue for Uber. But I don't think that's going to happen. I think Uber will be the platform for all of the autonomous players. Now, like I said, you can find all of this on FinChat. New users will get 2 weeks of FinChat Pro for free. And if you like it and you want to upgrade, you can use my link to get 15% off in the description and in the pinned comment. Thank you very much. And especially big thanks to those that have already used my link. AMD, I added 11 shares at $93.93. Of course, it went down even further, but that was a 10.5% increase of my position. SoFi increased it by 5%, 5.14%. Micron added 12 extra shares. Well, actually added 24 shares because I already added a couple of days before that. I did deposit some cash, of course, and now I have to wait a little bit longer in order to add more cash because this was basically a red alert emergency cash injection. And now I don't have cash anymore. I have to wait and use my other cash to pay taxes and some other trips. So fortunately, that's it. I went all in. I'll explain why. Well, you probably know why already. Then the other things that were added is, of course, Alphabet. Cannot add enough. So I added 7 more shares, an increase of 5.6%. And a couple of days before, well, I also added another 50% to Nebius. So that was back then a 25% increase to that position. So all in all, that's about it for the moves this week. As you see, cash almost gone, which basically means it is gone. Yes, there could definitely be more opportunities in the coming days, but I'm okay to wait, right? Because if I can only inject more cash a month from now, and maybe 30 days from now, or probably, not maybe, 3 weeks from now, we are going to be in the next earnings season. I think Q1 is going to be fine for most of the companies, plus a weak dollar is probably going to help certain companies that, well, guidance was a bit weaker because of FX headwinds, but the focus is definitely going to be on Q2 and some maybe changes to the full year guidance for some of the companies that provide full year guidance. And so I don't mind waiting a month or so to inject more cash because maybe the earnings season is going to be volatile. And okay, if we continue to go down a little bit or if we stay stable, I'm fine if I wait. And if it goes up great because I already have full positions. And like I keep saying, I have time on my side. Okay, I don't have to retire tomorrow or next year. No, officially I will only retire 34 years from now. So I have plenty of time. And to be honest, 5-10 years from now, I don't even think we're going to remember what has happened at the start of 2025, unless, of course, unless it is Armageddon and it is a drastic change worldwide. Okay, we'll see. We've had a trade war back in 2018. Most of you during the live stream couldn't even tell me what has happened in 2018. So most of you already forgot what has happened then. But right now, I'm not happy with the performance of the portfolio. Of course not. But I'm happy with the companies that I own. I still believe in each and every one of those companies. Yes, some companies might get hit because of the tariffs. But Alibaba a little bit, although the majority of the revenue is generated in China. So that won't really matter much, as I've explained in another video. All the tech companies, not much. Of course, if we go into a recession or worse, stagflation, maybe the likes of PayPal, SoFi, right, financial stuff could get hurt. You might say an Uber as well, because, well, who's going to use Uber or who's going to order from Uber Eats? Well, to be honest, I still think that a lot of people will use Uber to go from one point to the other. So that's why I'm comfortable owning what I own. Semiconductors, are we going to get some tariffs on them in the future? It's always a possibility. But I don't think it's a thesis breaker. And so, yes, I went all in. Whether it's going to work out or not in the short term, I don't know. Honestly, I don't know. In the long term, yes, my thesis for all of the companies that I own is still the same until something drastically changes, right? If we have a global financial crisis a la 2008, if that happens, then yeah, maybe some things might change because some of these companies might get very, very hurt. Who knows? But I just don't see that happening right now. Remember, we're now in a situation where a couple of positive headlines can change everything. Now, even if there is a recession, it might not be a very long one. It might be one that only lasts a couple of months, and then we're out of it. Some people have been saying that we're actually in a rolling recession since 2022, which, if you look at some data points, that might also be correct. But we'll see. We'll see what happens. This is my move. Of course, I would love it if the stock market starts to go up, but I'm also okay if we continue to see cheap prices for certain stocks. Short-term issues. Long-term investors, rarely was it the case where in these corrections, in these rapid corrections or bear markets, rarely was it the case that picking good companies for the long run did not work out. And so I'm going with that. I think the odds are on my side. And I think based on the comments that I've seen in the past couple of videos, most of you are thinking the same. So that's about it. Do share your thoughts down in the comment section below. What have you been buying? What have you been selling? What's your strategy going forward? Let me know down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.